Good morning, welcome to this weekly markets update from MRC Markets. Today is the 7th of July 2014. What I'm going to do today is go through some technical analysis on Euro Dollar, Cable, Dollar Swiss, Aussie and Gold, just to review what happened in the markets last week and give an outlook for this week in terms of technical analysis. I'm not making any trade calls recommendations in this video. Do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com. that will be most appreciated. For any new followers out there, we do have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at the Forex calendar briefly, just to see what's going on this week in terms of the high impact news. So today we have, in terms of high impact stuff, at 1:30 of the Canadian building permits. At 3 PM we've got the Canadian IV PMI. Then overnight, for anyone who trades a New Zealand dollar, you have the NZIER business confidence data. There is no forecast for that one though, so bear in mind on that. Tomorrow overnight we have more Aussie data, so the NAB business confidence at 9:30 at the UK manufacturing production. On Wednesday overnight you've got Chinese CPI year on year, and at 7 PM you have the US FOMC meeting minutes, so keep an eye on that, always volatile. On Thursday overnight we have Aussie employment change and the employment rate, so key figures for the Australian dollar there, and overnight, which is tentative, no specific time, of the Chinese trade balance. But on Thursday in the afternoon we have the UK, we have the asset purchase facility and the official bank rate numbers, and tentative with the MPC rate statement. And then 1:30 PM GMT we have the US, the weekly unemployment claims. And on Friday, to round the week off, the fairly quiet week I suppose in terms of data, with the Canadian employment change and employment rate. So there's quite a lot of Canadian data throughout this week. Do bear in mind that. Pretty standard week, nothing major. I mean, we do have FOMC and you have the UK stuff and quite a bit of Canadian data. So we'll have a look at the dollar CAD actually, as there's quite a lot of data coming out this week. But yeah, fairly sort of standard week, nothing major. And bear in mind we did have NFP etc. last week, so it does tend to start off quite a bit. There's some really interesting setups out there, so let's have a look at these charts. Euro dollar, this is the monthly. Just very briefly on this monthly chart. Of course it's a very long term chart, just to keep in mind this. It's nice to bear this chart in mind. We've had a new month, remember, so a couple of months ago we had this reverse. This is the fib from the high of 2008 to the low of 2010. We've had this. We had a couple of spikes here at the 50%, which is at 1.3956s, and that candle there. Bear in mind that candle is quite a heavy reversal candle, but we're above this 100-month moving average, and that previous month's candle is a fairly decent reversal candle. So keep that in mind. We are above this 100-month moving average, so don't be surprised to see some bullish action, I'd have thought. But you can already see this month we have sold off quite a bit, but of course we come up with some interesting retracement support zones, which I'm going to talk about in a minute. So that's the brief monthly look. Let's have a look at this weekly chart. What is going on the weekly? Last week's weekly candle is quite a heavy reversal candle, but yeah, we've closed below the 50-week moving average as well. But let's bear in mind here that on this weekly chart, so what was the fib we were looking at? The low of 2013 to the high of 2014, and we're looking at this 38.2 retrace. That's the level that has been holding up the euro dollar, and you'll see it when I just pop it up here on the fib. So there we go, that's the support that's currently holding us. That's one spot 35.17s. But yes, do bear in mind last week's weekly candle is a reversal candle, but we are sitting on some interesting support. I'm going to talk about that when I zoom into the daily and the 4 hour. But in terms of the weekly, yes, you'd have thought this week would come down, but in terms of the smaller fib setups, the one is definitely right in play as we speak. I personally think will hold up here. And that monthly, remember the bigger charts are always they always tend to be stronger. And so if you look at that fib there on the monthly, we've got a textbook monthly reversal candle here off the 38.2 and 100 month moving average. So you can't get much stronger than that. So bias, I think it does have to be towards the upside, but don't be surprised to see it maybe, I know, perhaps start off heavy this week, or I'm not sure. It's a tricky one to call really. But in terms of the weekly outlook, in terms of the smaller term setups, there's one definitely in play here. And I've just flipped it to the daily chart now, and it's this move here. So a nice bit of uptrend here from the pretty much the June uptrend, and then we've started to retrace in July. But you can see here, so I'm just looking at 38.2 now. Let's keep it nice and simple. This 61.8% retracement is acting as nice support here. So to be honest, I think today's daily candle close is going to be really interesting. If we get a nice reversal candle, I'll not be surprised to see it rotate towards the upside this week, or at least towards that 50-day moving average. And if we get above that, then you've got the 200-day moving average just there. But if we do close below this 61.8, and it's not going to be an easy bounce here, especially that last week's weekly candle. Don't forget. So if you do get closed below, then we could get these lows potentially get taken out this week, and those lows are at one spot 35.02s. Remember, so interesting stuff at the minute. Big setup that. It's valid on the 4 hour as well, so that's pretty much it doesn't look that pretty on that 4 hour, but you can already see, if I zoom in, this current 4 hour candle is looking like a nice reversal candle, so keep an eye out on that one as well. And you can also see it's got previous support here as well at the 61.8 and previous resistance as well. It was interesting actually, because I think this happened on Friday, maybe Thursday or Friday. We're getting some action here at the 50%. And it did coincide with a nice round number at it being the 136 level. I think I did tweet some information about that. But if you do look on the daily, I'm just going to zoom back in, you can see the biggest support here is at the 61.8 and not the 50%. So I'm not surprised to see it have a sort of weak sort of bounce here at the 50%. And then come back down here towards the 61.8 and getting it more interesting reversal, and buyers already coming in. And if you look at that 15-minute chart there, straight away after that sort of hammer there, we had some lovely, a nice bit of bounce here off the 61.8. So yeah, it's all about that setup really, to be honest with you, going into the week. Big fib setup here. And also another reason why it may not come down to lows is because there's nothing really. It may be a 38.2 actually. I'll just draw it up and check. Let's have a look here. Yeah, so we are coming off a 38.2 retrace here again. So interesting stuff on the daily. So yeah, I mean, don't be surprised to see it come back down. It'd be very interesting. As I say, I think the daily candle close today is really the key one, and we have had daily candle closes below the 136. Remember, so. Maybe it does want to come down to 135s, but no, today's daily candle is the key one, I think. Get it closed above 135 and we should rotate towards the upside, but if we do sort of stay below here, then I'd not be surprised to see the 135 cap and it rotate down towards to the downside. Cable on the weekly, surprise, it's just in grind high mode, ripping up towards the outside. Last week's weekly candle, really bullish, just continuation pattern. There is a bit of upper wick on last week's candle, so I'd not be surprised to see a sort of brief retrace this week. But in terms of the overall pattern on cable, it's just absolutely flying up. And as we spoke about last week, the main resistance level in terms of fibs, you have to flip it all the way to this monthly chart here. So it's 30.2. It's all about the big 50% here, which comes in at one spot 73.40. So yes, we are still a way away from that. We're about 180 pips, 190 pips away from that level. But do not forget it, as if we do keep on grinding high, and that's the big resistance to keep an eye out for. Also, that resistance coincides with these highs around here. You can sort of see between 1996 and 1998, and the support of sort of 2004, 2005, 2006 around here as well. So I do think we will get there, and I think we should get some interesting selling action at that level, so remember to keep an eye on that if we do get there. In terms of shorter term frame charts, so the weekly, nothing major of interest, to be honest with you. The only thing that is of interest, actually, on the weekly, what we've been speaking about in terms of this year on the weekly, these small sort of fibs here. So that was the first one there. That first dip, we bounced off the 61.8, and then the next one here, we bounced off the 50%. So it's all about then extending the low to where we bounced off and then extending the high. I mean, yes, it may not have topped out right now, but it's all about just extending that high to wherever we do top out. But it's more importantly, it's about the low of that fib there. So currently, let's say we do top out here, then the 50% here comes at one spot, 69.36. So keep an eye out on that, and that's the same on the daily chart as well there. So I mean, you can see in the daily we're getting some nice support at the 100-day moving average here with a bit of a cap there at the 50-day. But no, you can see it's starting to chop around a bit, so I'd not be surprised to see it do some sort of retrace. In terms of daily though, this is definitely the key fib to keep an eye out for. If you're looking at the 4-hour chart and you're an aggressive buyer of cable, then I would not be surprised to see. Well, it's tricky to pick a low on this one, to be honest with you. I've just flipped it back to the day. A lot of people may be looking at sort of this low there. It's not that clear though, I think, or maybe even that one there. But I personally prefer to keep to look at the more obvious ones, because they tend to have the bigger orders at them, and they tend to act better in terms of support and resistance. So that's pretty much it in terms of cable. I mean, of course, if you're trading intraday, then keep an eye on all the sort of the big obvious round numbers. So currently we're hovering around the 171.50 marker key line in the sand going into today. You can see on the 1-hour chart they're already having some interesting resistance action there at the 171.50s, and also some key moving averages there as well. Dollar Swiss on the weekly chart. What is going on? Last week's weekly candle is a no-brainer there. Very interesting to see. If we look at the fib that we've been speaking about here, from the low of 2014 to the high of 2014, I said keep an eye on that last week. We'll see what happens if we do get down to this 50% retracement at the 0.8867s. And surprise, surprise, we've had buyers come in at this level and form a nice candlestick reversal pattern here. So odds are for this week that we will grind higher, I'd have thought, towards that sort of 50-week moving average. Again, we didn't quite test it before, but in terms of this weekly, it does look quite bullish. And that's the view on the daily. So what did we have last week? We had, so yeah, I think that's pretty much at the start of the week. The price came down to this 50% and this 100-day moving average as well. We pierced below the 50% and posted a lovely reversal daily candle there, and we've just rotated higher since then. We're also currently above this 50-day moving average as well. So the signs do point towards the upside here, I think, on this daily chart. But similar to Euro, we are looking at a counter move here in terms of the bigger move, and this is the move here. So this is the fib from the high of June to the low of June. I think it may have been even the 1st of July there. But interestingly, we've had a daily candle close above the 50% here. So I mean, also to keep an eye out for, this 50% does coincide with 0.8850s as well. No, it doesn't. What am I talking about? 89.50s, sorry. 0.8950s. Bam, you can see we're testing that currently. So keep an eye on that round number. I mean, yes, it has closed above the 50%, but I would have thought a lot of people would be looking at this round number as well. Also, big previous key resistance here back in April and back in May as well. So they're the two big fibs to keep an eye out for. In terms of 4-hour chart, nothing major of interest. I mean, if it does start to retrace, I would have thought a lot of people would be looking at this move here in terms of buying opportunities. So that's the low of July to the current high of July. So that's the other move to keep an eye out for, I think. Aussie on the weekly. What's going on? We spoke about this sort of fib move here from the high of March to the low of January. The high of March 2013. Well, the high of May, was it March? no, it's April, sorry, high of April to low of January this year. We haven't quite got to 50% yet, but do keep in mind on that. I mean, last week's weekly candle is quite a decent reversal candle, but there is a bit of lower wick on that as well, and I'll show the shorter term chart as well, because I think it's a daily in the 4 hour. It's a nice sort of fib move which is setting up, so no wonder we're starting to get a bit of support here. But that's the fib to keep an eye out for on the weekly in terms of the bearish move. And then the bullish move, of course, you've got this one here. So if we do, I mean, it's been speaking like this for ages, but it hasn't come down. It's just been chopping sideways and sideways, remember. That's the one to keep an eye out for. Did we get a weekly close above 94? We did just about, but it's actually faked and closed below. So we're technically still sort of chopping in between here. Maybe it's all about talking about the 0.9450s. And the 0.92, because how long have we been talking about? It's just been chopping between 92 and 94. Then we got that candle there. I'm hovering my cursor over that, briefly closed above the 94, but last week's weekly candle has closed below, so it is technically still chopping in between. It's now 250 pip range and not 200 pip range. So yeah, that's the view on the weekly chart. In terms of the daily, what have we been speaking about? I mean, don't forget this fib move here played out really nicely. So that was the move there, and keep an eye on this low, because now what we're going to do is remember that, yeah, so that one bounced with the 50% rotated higher. What we're doing now is just extending the high here, and bam, surprise, surprise, we're getting some lovely support of the 50-day moving average, and it's currently pretty much sitting just above the 50% here. So we did get a daily candle close above the 50%. So if you flip it to the 4 hour here, we've had some closes above, and now it's trying to get above here and make this 50% act as nice support. Also notice on this 4 hour chart, you have the 200 simple moving average act as nice support as well. So a lot of confluence with the moving averages here, some interesting fib levels, a lot of things pointing towards the upside. I definitely think in terms of the start of this week, we'll get some sort of pop towards the upside. And if we do, and if you do think that the market is going to come back down, then this small move here from the high of July to the low of July here, this 50% could act as decent resistance. That comes at 0.9416, and you can see it nice and clear there on the 4 hour chart as well. Okay, let's look at gold. So that's the Forex done. What's going on in gold? What have we been speaking about on the dailies? Keep it nice and simple. Bam, this move here. So the fib from the high of March towards the low of May, June. Price has come up, tested this 61.8, and it's trying to grind lower. So that's the bearish move. Then in terms of the bullish move, it's just a counter one there. I think this will act quite nicely if we do get here, because it's just a nice uptrend here, no sort of chopping around like it has here. And remember, we did break this this trendline resistance as well, so I keep that on the chart as well, because we could get some interesting confluence. But yeah, I think it may come down, you know, these next few days, or maybe even next week. It could come down towards this 50%, which is currently at 1286, and then there's some nice moving averages are flattening out as well, so we could get an interesting bit of confluence at the 1286 with the 50-day moving average. Also notice, remember this sort of previous support around here as well. Lots of lower wicks pierced this level at the 1280s. Although it didn't hold in the end, it did break below, but it is previous support, so I'll definitely leave that as well, because that comes in between the sort of 50% and 61.8% retracements. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs that we may have a look at next week, then feel free to comment under the YouTube channel, or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.